Face of the team.
Oh, hey, folks. Welcome back. Welcome back to Chart Talk. It's May 31st. Memorial Day weekend's officially in the books. Bennett, how was your Memorial Day weekend party?
It was good. We were just missing someone. I don't know. Someone promised they were going to come to Jersey, and I don't know what happened.
Yeah. Someone also promises they would record these Chart Talks, but, people don't follow through sometimes. People did not follow through sometimes. Without further ado, let's jump right into the market outlook, shall we? All right, so market's been short squeezing a bit. We had the fastest down move, and it was more so the QQQ. We had the fastest down move to start the year. This is the beginning of the year, but we saw it really accelerate over the course of the last 2 months. And we had a short squeeze beginning. So I'm going to bring up the S&P 500. And you see, it was very big information. This was a Friday of 2 weeks ago. We pushed lower, and then we saw that capitulation buying when we touched 380. I think this is when the SPY officially hit bear market territory, quote unquote, and that's the intermediate bottom. Go figure. So it was very important. We rallied off that level, and then this was last Wednesday, where we tried to push lower, and then we recovered. That was the tell right there. And then that began our short squeeze that came into this week. And now it's the question of how far are we going? Is the bottom in? Should we be putting our max risk on? Things like that. And my take is, let's look at the action we've seen this year. And these are the kind of things I've circled. So, vicious down move early to start the year. We got a big, fast bounce. We consolidate the bounce. We try to push higher again. And it's another sell-off, right? Then we get oversold. We get that big bounce, that relief bounce. This is when the Russia-Ukraine war started. It was like, oh no, we can't catch a bid. Boom, what happens? We catch a bid. We consolidate a little bit. We try to push higher. What happens? We get another sell-off until we're, again, at oversold territory. Sellers are exhausted, so buyers step in. Big rally, 10 of 11 green days. We pull in, we consolidate, we try to push higher again, and that started the vicious sell-off. So, why would I think we're going to see something different here? I think we'll continue. I'm not sure if we'll continue to push higher tomorrow, but I definitely don't think a bottom is in for the year. I don't think much has changed from the macro outlook of sort of things. So I'm taking trades here and there. What I'm definitely doing is sticking with the relative strength. I'm not bottom picking, Amazon and these tech names. You guys can have fun with that. I'll just keep buying these ridiculously strong energy names and selling them into strength. So that's kind of what I've been up to. What you thinking over there, Bennett? Let me stop sharing.
Very similar outlook. The market pulling back, even with the individual sectors, like the consumer staples got smoked 2 weeks ago. Target, all of these names like missed and got destroyed. And this is often the time when people try to panic out of positions and they want to, the market's going to zero, I need to get out, this and that. When if you can wait for these bounces, then you can kind of unload stock and get off in those little like kind of relief rallies. So that was like consumer staples gave us a perfect example of that, where 2 weeks ago we had this huge drop from 194 down to 180 when everything looked so bad. And now a week later, we pretty much almost fully retraced that move. And this is one where instead of panicking out in that down move, is you kind of got to sit through the pain. When you get these little bounces, you can take them off. And like even for us today, you were taking profits in Oxy. I was taking profits in Schlumberger, and I even had like a SPY position on where 4th, 5th day up. It's like I'm going to take profits into this move. I'm going to sell into this bounce. I'm not going to try to chase it. And that's kind of what you have to do when we're in these kind of more rocky environments. If you get trapped in names, if you get kind of stuck in positions, which in this type of environment could be very easy if you're not really keeping close eye on the names that you're in.
Got to play a little defense out here.
So that's my little take for the. One last thing. Pull up TNX.
The 10-year.
So just pull out like a monthly and just pull like a horizontal line over that 3.2.
Let me get some moving averages out here for you. All right.
Perfect. So this is one of the bigger things I feel like you and I have kind of touched on the last couple of weeks, where we're rising rates. It kind of hurts the market. Kind of people not businesses aren't trying to invest as much when interest rates are higher. But we saw this dramatic run up into this major level of resistance that hasn't broken for nearly a decade. And as quickly as these things get up here, just like with any stock or major sector or even major market, the faster you have those run ups, you also have just as quick and just as fast as it was pulled out, just like we saw 2016 to 2019, 2018, that run up to like that 3% interest rate, and then it just dropped. The pandemic happens and it completely reversed it. So my thing is, I've been talking with a lot of realtors lately, kind of getting their feel of the market, and not trying to lead my question anywhere, but just ask them where they see rates going. And most people are never really looking at the 10-year. They're, that's not really their focus, but most of us I spoke to, their assumption is like, we're going to stay in this 5 to 6% interest rate environment. But then when I started to pull up these charts and show them like the 10-year and how that has a big weighting to interest rates, and that we are starting to slowly start to pull back a little bit, that maybe rates will start to come down a little bit faster than most are anticipating. So that was just something to keep an eye on. Again, the more that this 10-year can pull back in, should help us on the equity side. That was just the other point I want to make. But other than that, we can jump into some top ideas if you like.
Oh, for sure. All right, sorry, I had a little phone call there. I must just ended our whole recording. It was a little scary in my end. So what do I like? Let me see. I had a little list here. There's my little research. So let's start us up. ATGE. All right. So what we got going on here? ATGE, they're actually an education company. And what we got here? They got a big gap up on earnings, big move higher. And now we got a nice little earnings flag forming right on top of this. I believe this is the 200-day simple moving average. So through that 33 area, that one's looking good. I added to, I'll talk about this later. I added to this SO today, but that brings me into this PEG, utility stocks. I still like these names. Again, y'all can have fun with your Amazons. I'm going to keep it boring. That's what's working in this market. So through the 69.25 area, I like that PEG. I think that looks really good. I'm definitely going to get involved with that one tomorrow. This GLNG, not sure what to think about it. So I made this a trade of the week. They had earnings. What was that? Thursday, they had earnings. Liquefied natural gas stock. This market is just booming right now. Supply and demand dynamics, with one, the COVID situation reopening, two, Russia, Ukraine constraining supply even more. And then three, this China reopening situation, which is why we saw energy get bid up so much today. But so this GLNG, really good, fundamentals. Chart looks amazing. It's in the right sector. Began to break out today, and then it kind of fell the rest of the way with all of oil, which we saw. So we saw crude when, this morning, crude was touching this 120. All it's done all day since, it's kind of profit take. So, we saw that action across the board in energy pretty much. Stocks looked very strong early. It ended up being a profit-taking situation. So we'll see it, this GLNG. If it wants to flag out, give another entry soon, I'll give it a look. But right now, not much to do with it. This BRBR, I don't know who put this in the chat. I want to give them credit. I love this chart. I love these recent IPOs that, just flag underneath their all-time highs like this. And what's funny is we'll see this all-time highs is 26.64. It's such an obvious trade. We'll see it take 26.65, and we'll just see an influx of buy stops go off. It happens nearly every IPO that sets up like this. So definitely want to be in that one through new highs. What was that last one I had? Oh, OPCH. This is a kind of like a nursing management company. I forget. I was looking into the earnings. The growth was really great. Price action is strong. Only problem, they already broke out. So now I want to see a nice little daily flag form under this 31 here. And I think that one looks good in the future. But besides that, we had so many things. I was doing just taking so much profit today. Had a great day of realized gains. I was done trading in about 20 minutes. I was just trying to figure out what to do with myself all day. Had a sick day. Read up on Winston Churchill. I'll talk to you about him later. But what are you doing over there?
So I got two, but before that, again, last week we were talking about we weren't feeling love, and we set this arbitrary goal of 100 thumbs up or whatever it was, and the past few weeks were like in the 20s, so it was like 500% higher, which was kind of a long shot. But just want to thank everyone. I think we got to like 75 or 77 before we started this video, and Shake was just like, let's just do it, instead of waiting for 100 and waiting another week or so. So
that's
still watching.
That is not what happened.
Really appreciate it.
That is not what happened. Folks at home, no. I'm stopping the share. I didn't want to do it. I still don't want. I don't want to do it.
Shake, I was trying to give you
Winston Churchill. I was trying to read about Winston Churchill in the sun. I was having a great time with my dogs. Okay, what do you like?
I was trying to give you like a little layup. I was giving you a little, killing it.
Hey, my research speaks for itself. I don't need to tell them about my effort.
All right, so I got two really quick. First one, CHRW.
All right, CHRW, got it up.
Yes, the little blue sky breakout through that 112. Earnings are out of the way. We've seen, these higher pivot lows, for now it's kind of versus 100, still pretty wide. I wouldn't expect this going anytime soon, but whenever that 112 wants to break, definitely looks good. And what was the other one? This HOLX.
Oh yeah, I forgot about this
today. Today it closed horrible. Probably.
Yeah. Oh, that's why I didn't. Okay. Cool.
Yeah. So it looks, obviously, but again, market related today was kind of like a prop taking day, overall. So not too surprising, but through that 80 definitely looks good. Again, you have that retest at 84. So that's kind of going to be like your first area of resistance when this thing does want to break that area. Not as good as that CHRW, but still two names that are flagging pretty nicely on their dailies. So those are two that I'm keeping a closer eye on.
Love it. Love it. Good trade, bad trade time, huh? We still on my screen? Let's see it. All right, so let me start with the bad trade. Oh man. I messed this ALB up. So I'll tell you the trade, and you can't see my entries because it was over 7 days ago. You can see show trades last 7 days. So love this, kind of weekly bull flag setup, weekly base setup. I started looking into the company. Their earnings are ridiculous. The whole lithium market's looking good. So I originally, when I was buying it this day, I was grabbing a feeler, and then we liked how they revised their guidance up. They had their earnings and they revised their guidance up, and then we bought a feeler. And then the next day we get surprise news that they're upping their guidance a second time, 150% higher than analysts first thought. So something you just don't see too often. So I had a momentum ad here this day, 524, and mentally this was a momentum ad being like, it's got to go today. And if it doesn't go today, I get out of the stock. But what happens is it gives me a doji on the day. It doesn't break out like I needed to. And I still hold on to that stock. And that's where my mistake comes in. So normally I'm giving my whole position down to this 225. Then I start negotiating with myself like, all right, below this 237 area, if it fails there, it's probably headed to 228. And look at that, I'm changing my game plan. It's day one stuff. So I end up hitting out of 3/4 of my position at like 234. The low is like 233. Again, that's in a $200 name, that's pennies. So, and then what of course happens, ticks the bottom, it goes up. And now, since I took a loss on 75% of my position, my break even becomes, I don't know, 275 on this trade when it should have been, I should have been up 100K on the trade. So very frustrating, but there's that was like the trade I needed to be like, all right, enough of the BS. It's time to put in work, time to get in that old school mindset. And let's see what else I did. So I got this LNG, crushed this one. Again, natural gas market. These are the names I'm just going to continue to trade, have fun with your Amazons. I bought this 132, kicking all the way up, and I got up a lot this morning. You see it pulled back, but I still got some, in case it wants to take this macro pattern higher. That one looks good. This Oxy, OXY. You can't see the entry. It was longer than 7 days ago, but it was the 63 area. You see we're kicking all the way up, and I completely sold 74 today. Very proud of that sell. That's beautiful.
Yeah.
That was beautiful. Yeah, this SO we bought last week at the 74. I added today. I don't know why it's. I guess a little keystroke there. I got out of my position, but again, it turns the 75 into new support. That one's looking good. Again, I love utility stocks. Let me shout out this PEG again. That looks beautiful through 69.25. Again, have fun with Amazon. What else? NFE is another winner. Look at this. Fortress Energy Group. We see it holding the support. I buy it the next day through this. Oh, actually, I had a feeler this day, held on to it against this 40, obeyed my stop because I took that awful loss of ALB. I was like, you know what? The least I could do is give this NFE the full room. Ends up rewarding me, gives me another entry through 44 yesterday, and I have my first kick, but it was like 80% of my position today at highs here. If it does want to take out that level, I got some stock. I'm good. Anything else?
That's like a 4-day 10% move.
I know, man. It's good stuff. I need to take that ALB loss. Stop being a bitch out here. And that's really it. I mean, a bunch of like mishmash, little day trades and things like that. But that's the most of it. Sticking with energy. I think energy continues to lead for months and months. I don't think much changes in our macro environment. I don't think Russia's going to stop invading Ukraine or anything like that. So, and I don't think the Fed's going to slow down their rate raising schedule. What we learned last time was Market cares more about inflation than anything else. So if they slow down or pause that rate hiking schedule, might actually cause stocks to sell off again. So that's it for me. What you doing over there?
I only have one bad trade, and that's SLB. Schlumberger.
Schlumberger.
So you can
Short
zoom
it?
out. You can probably put like a weekly up because I've been in this since the pandemic. This is probably more of a relevant example for the individuals who have started to, more some of the guys who started to use like M1 and pick individual stocks like long term. And then, the market being pretty crappy these past few months, experienced the downside of long-term investing when the names get whacked. You keep mentioning Amazon. That's a good example. Like if you bought Amazon, a few months ago, you're probably down 20, 30%. And that's when it's like you're in that hole psychologically, and you're watching like almost every tick. And Schlumberger and even Oxy were two of the names for me going at the beginning of the pandemic that I was buying these names, in the 40s, on this, November, January 20 in this 40 area, didn't have a stop, kind of forgot about the positions, and then got trapped in it. And it took me, more than 2 years to finally get out of it today and make a little like the worst risk reward trade possible, but got the money back, made a little bit of money, got whatever the joke of the dividends were over that period. But that was the reality of this round trip where you do get trapped in these names. This was a significant drop. My cost basis was like I think it was like 38, 39, dropped down to 10. It was a significant percentage drop. And I, obviously didn't sell any. I picked some up along the way. And finally today, it was like me just being exhausted with the name. Like, again, like you mentioned, energy probably still continues higher. Schlumberger is probably an $80 stock in a year or two from now. But for me being in this name for 2 years and seeing it a red name on my portfolio for 2 years, and today was one of the first days where it's like I can get the money back and make a little bit. It was like, just get me out of this thing and move on. And I think these are those lessons where I think of when I first started trading, like back in 08, it was all long-term stuff. And it was obviously all of this. It was buying it on the way down, sitting through all the pain, and then getting rid of it the day, years later when it ticks up, a few percent. And as I've learned a little bit, I've been able to minimize that dramatically, where during the pandemic, I had probably 15 or 20 positions on, and I got stuck in Schlumberger and Oxy and like Boeing, like 3 of the names in the portfolio. The rest I was able to get out of. So this was finally the last stock out of the pre-pandemic portfolio that's fully gone. Again, very bad long-term trade. Again, kind of day one stuff of that round trip, getting rid of it when it probably does continue higher. But the reality of being in this name for 700 days and it being red, 609 of them, you just want the money back. And you don't, for me, I don't even care if it goes to 100. It's like, if it does, Godspeed, but just give me the money back. I'll go somewhere else. So that was
I would do the same thing in that position.
Yeah. So that was my bad long-term trade. But this is I think it's a very relevant example. And the bigger point is just the amount of time where if you are down, especially in some of these high-graded names, the Shopify's, Etsy, CRMs, names like that are down 50, 60% off their all-time high. It probably is going to take a year or 2 years before we see those prices again. And when you can at least know that going in, and you're not like, I need this to be back there in a month, you can kind of manage your expectations a little bit. Like even for me, I didn't think this was going to take 2 years for it to kind of work its way back, but that's kind of how long it took. And as soon as I was able to get out,
that was just that was kind of the message I was trying to send home. Like, if you're a short-term trader and you're still trying to buy these Amazons and Shopify's, it's a very tough trade. It's a very counter trend trade. It's Etsy, all these things that used to be huge winners. Roku, my God. You're just so counter trend at this point.
Yeah.
That I was doing the same thing at the beginning of the year, like trying to buy dips and the things that used to be the strongest names. Then I started focusing on things like energy names that have great charts. Even PEG. When would I ever talk about PEG? In the previous 5 years, never, ever, ever. But that's what the environment's giving us. So you got to take what the market gives you. It's as simple as that. And this shit looks good tomorrow.
Like with those two charts, it's like PEG. It's like the high 70, 75. It's at 69. This nice little base. The only people that are screwed in PEG are the people that bought that doji at high. And like, is this daily? Yeah. So the last 2 weeks, people who bought on the way down, that's the only people that are really trapped. But if you pull up like Amazon or Shopify, and again, I have both those longer term account, everyone in the last couple of years is all screwed in the name. So if you're for me, I was screwed in Schlumberger. As soon as I was able to get out, break even, I'm now a seller. I'm putting pressure on the stock. And that's just, that's the market. People are, they want their money back. So that's where, like for us, we avoid that bottom right chart, because all those people are thinking the same thing. Like initially they want to make money. They're losing money, as I was in Summerjay. And it's like, now I get the money back. I'm now a seller. Where for like that PEG, it's such a small group of people that they're not going to have as much weight to hold the stock now compared to the last 2 years or 3 years worth of investors that are, underwater and can't wait to sell.
Right. Oh.
Yeah. So let's speed this up before this camera dies.
What are we doing?
Book of the week. All right, Jake, let me go first with the book of the week, just so
you got it. I got it. Let me
big,
wait. Stop share. All right.
Cool. All right. So I got big mistakes. I think you actually.
I read that one. Yeah.
Yeah, I think you did. Honestly, I really like this one. They had.
I like the guy. I like Michael Batnick.
There's a lot of really good examples here, not like trading specific, but just broad, kind of more risk management stuff.
It's like I wish I wrote this book,
Yeah.
Such an easy book to write, but it was very, very knowledgeable.
Yeah, they were doing
no hate against the book. It's just like something I feel like I could have written.
Yeah.
There was look up every biggest investor's biggest mistake.
Yeah, there was who was the last guy they talked about? It was like Paulson. No, what's the guy? I can't think of it right now. I'll do it next week. What book were you reading?
I'm reading it's called The Splendid and the Vile. So I was struggling. I was reading this book, Insider Buy, Super Stocks, and I think this guy's just one of those people on Twitter who just like shills penny stocks. Like that's what I'm just kind of realizing. The book ended up being a huge waste of time. But what we got here, some Winston Churchill, some strategy. This shit's sick. It's all about how they like in an emergency effort, they made him the Prime Minister of England when Germany started invading all these countries in World War II. And it just kind of goes through his day-to-day and all the decisions he made and things like that. It's pretty sick so far. How he's like, the only way we're gonna survive this thing is if we get the Americans in. And I'm 50 pages in, but funny, cool book. It's Churchill. No matter what, he would take 2 baths a day. No matter what the hell is going on, he's taking 2 fucking baths a day. Like what?
That's bull. So I found the guy. So one of the stories here, talking about John Paulson, who was one of like the big guys on the financial crisis who bet against the housing crisis. That like in the Big Short, talk about Mike Burry, but this guy made like even more money than him. He had like kind of the bet first, but the example in the book with Paulson was he made like $5 billion during the financial crisis betting against housing. It was the highest paid hedge fund manager of the year. Had one of the biggest hedge funds at the time. I think he had like $35 billion in asset under management, which now today it's kind of chump change, but back then it was huge. But the big thing for him was like he was like that one trick pony. So he had this huge grand slam of a trade. He made like billions of dollars, and such a took the trade took 5 or 6 years to happen, but the P&L spike was like in this very short span of time. But once he had that big win, he couldn't go back to any singles or doubles. He only had to hit this huge grand slam. And from the 08 crisis until now, his AUM went from 35 billion to now he's down to, in the book, it was like down to 5 billion. So he's lost $30 billion since, because he's only looking for these macro, once in a lifetime, super black swan events. And like his next idea was to buy gold. And it's funny because I remember back in 08, like those were the articles, like Paulson was like the god. And I remember his bet was on gold. And I actually bought some GLD because of it. And so it's like, but it was just a very good example of just, even the smartest guys in the world, when you get stuck and like you need to hit these grand slams every day, it can get very costly. So got to keep those levels up.
Well, what's funny is it was the best and worst thing that ever happened to him.
Yeah.
At the same time, it's like all these COVID companies, like Zoom, Peloton, all these things. Now they're underwater from their COVID. It's like, well, they've been better off without COVID ever happening.
Yeah.
Who's to say?
Oh, even like the testing centers. It's like those places killed it for so long, and now you pass them, and it's like, crazy revenue for
good news. Good news, it's coming back. Yeah. Yeah.
I know that's good news, but
no, I'm saying good news for those centers. I don't know what the hell's going on. I don't try to overstep my boundaries. I just read about Churchill and I buy some energy stocks. And with that, folks, catch you next week or 100 likes or whatever Bennett decides. Get me back on the camera. See ya.